Hi folks, Dan Fatica of DJF Asset Management. Today I wanted to talk through a little bit about bridging finance, an introduction to the topic for those of you that maybe haven't used it before, and an explanation of why it's not so racy or risky, although expensive when used sensibly with a carefully thought out plan, can be a really powerful tool for helping you scale and grow your portfolio. So just roughly talking about price, why would you use a bridging loan to buy a property versus buying with a traditional mortgage? You've got rates of mortgages, historic lows, some mortgages below 1% in the personal primary residence market, that is a mortgage over your own home. In the buy-to-let market, you're getting stuff as close to 2%, but certainly below 3% at the moment per year. So why would you pay a bridging loan of 1% per month? The reason for doing so is that actually it allows you to turn your money much quicker. Okay, so if you are an individual with £50,000 available for a project, that could be a £20,000 deposit and a £30,000 refurb. If you're putting that money into a property, it's going to be tied there for the term. So if you're going to buy the shortest period available as a 2-year fixed mortgage, that's going to have an early redemption charge of 3%. So as well as paying the 1.5% arrangement fee or entry fee for that mortgage, you're paying a 3% redemption fee. You're already up to 4.5% before you pay that 2 years finance costs. Before you pay 6 months finance costs to do the loan. Before you know it, there's not going to be a great deal of difference between buying with a bridging loan and paying maybe 10% or 15% for maybe more pragmatic and dynamic bridging lenders. You're going to be in for 6, maybe 7% paying a buy-to-let mortgage. So you're not making a huge amount of saving. That's number one. Number two is that through using a bridging loan, you're able to turn your money much quicker. So you can buy, refurb, and refinance onto a 5-year product or a 2-year product if you see fit after a 6-month period. So that enables you to turn your money much quicker, allows you to scale your portfolio, and it's something that's used regularly by our clients that are typically experienced portfolio landlords with 3, 4, 5, 6, 7, 8 plus properties within their portfolio, buying the latest property, renovating it, turning it around, and letting it long term. An example that we've recently come across is we've been able to provide 100% of purchase finance for a project. I say to people, allow back of a napkin 15% for all your costs. That's entry fee, exit fee, your monthly facility fees, paying a solicitor, paying a surveyor. We were actually able to provide full funding for a project that had £100,000 profit available for the developer. Whilst there were finance costs associated, £30,000-35,000 budgeted, depending on how long it takes them to deliver that project, without putting any money down, they're able to take £65,000 of profit through completing this project that otherwise would have been unavailable to them. So it's not only the cost of the finance, it's what using that finance enables you to generate or create through specific property deals. So for those of you that are looking to scale up your portfolio and grow aggressively, bridging finance is a really powerful tool. Understandably, it's not appropriate for everyone. For those that are sat on large piles of cash and their focus needs to be around deploying that cash as best place as possible. For those of us that have maybe more finite resources, £30,000, £50,000, £100,000, getting those funds into a number of projects and really scaling that portfolio quickly can be the difference between hitting targets in 2 years and hitting targets in 3, 4, or 5 years.